it can happen. I want to bring in now Main Street Asset Management Chief Investment Officer Aaron Gibbs. Aaron, listen, I'm not saying tomorrow, but I think the BRICS can be formidable. Honestly, I think we would have lost our world reserve currency if every other of Europe had their act together. But there's no one to supplant us.
No, and right now there really isn't. And while we're seeing an increase in the RMB, and certainly some countries, each year within the BRICS, there seems to be one country that does really well and the rest really fall or often are very negative.
Right.
So it's difficult as an investor to pick them out and say, okay, let's bet on emerging markets because some are really about growth, some are, as you said, very focused on natural resources. You might want to think more about getting into futures on commodities over investing in some of the BRICS stocks. There's often just better transparency, better liquidity. But certainly from just how we see the U.S., our economy, it's important to keep an eye on them.
Oh, yeah.
I mean, you can't ignore it.
And I think, the White House yesterday at a press briefing kind of said, they didn't consider them competition, but they are, they're competing with us, even if we don't think we're competing with them. Speaking of the future, Goldman came out with this big piece yesterday, getting a lot of press. So after looking at everything, they're saying, okay, for the next 10 years, we're going to grow the market, expect about 3% a year. That doesn't sound too great.
No.
How would you invest in this sort of environment where expectations would be so low?
So one of the things that Goldman had mentioned, and I think it's really important to state, is that a lot of it is because they're looking at because the market is so concentrated in the mega caps, and not just the top 7, but really the top 10% of the S&P 500. When you start moving down the spectrum, and this is what I think is really important with that kind of headline, is it's going to be more about diversification. It's not just going to be buying the S&P 500 or buying those top 10 stocks, but look outside of the box, look farther down in the small caps and mid caps for better growth, better valuations. And I've been saying this for a long time, is if you haven't already, sell some of your S&P 500, do a little more diversification into small caps. I still think the U.S. stock market is going to be one of the better performing areas, but certainly when you look at a valuation point and a growth point, we're looking at about 17% growth next year for small caps. That could be really one of the winning areas for next year.
And now's the time to start building that kind of a position.
Absolutely, because now we're looking at a more stable rate cut environment. It's not so focused on, is it going to be 50 or 20? We have an idea that it's going to be more slow and steady. That steadiness, that stableness of the economy can be really helpful for those riskier stocks.
Right, and as those rates come down, it helps the small caps, particularly those floating rates. All right, I know you still like uranium. I know it's only been 3 days since you told me last, but still, it's a hot trade, right?
It's a hot trade, and I haven't backed off just yet. And look, there are more and more companies coming into it. Again, this is your risky bet. When I talk about diversification, this is on the risky side. Both of these ETFs, they have a big weight in Canadian miners, but they mine all over the world. Their customers are all over the world. You're also getting exposure to China in these stocks, FYI.
Yeah.
They're big buyers of uranium right now, more so than the U.S. So in a way, this is an emerging market play as well. But just a long-term play, I would say if you're going to get in these, put in a stop loss. They are volatile. They are very attached to the commodity price.
You wouldn't be worried about stopping out and then like 2 weeks later it's back up again?
I think we've given the stability that we've seen more recently.
Okay.
I'd make it a bigger, not 5%, but maybe 10%.
I got you.
But it is a commodity-based type of trade, so you want to be careful if it really goes against you.
So 20 seconds to go. What's your greatest concern right now?
Just getting through the next 2 weeks, honestly. Yeah, I think we're going to see a lot of volatility over the next few weeks between earnings season and the election. Getting past that, once we know, well, I guess really 3 months.
We'll know. Hopefully we'll know in a couple weeks.
Yeah.
All right, Aaron, thank you so much. Well, we'll know.